Chipotle is setting up to be one of the hottest stocks of 2026, and with earnings scheduled for October 29th, let's break down everything you need to know. Plus, stick around until the end of the video where I'll give my bull versus bear framework and price targets so you can decide if you should be buying this dip or that one. The community is growing, so subscribe and turn on all notifications so you never miss any big ideas. And make sure to check out the other stock analysis videos, which you can find the link to at the top of your screen. My goal is to deliver the best stock research on YouTube, so shout out to a member of the channel, Zach, who left an idea for today's deep dive. Keep leaving your comments below, and I'll work on these big ideas so we can outperform in 2026. The market closed in the red this week, with Chipotle down 34% year to date, making it one of the worst performers when compared to other restaurant stocks. But if we zoom out to the monthly chart, Chipotle has had an amazing run. I always start with the chart to get an idea of what key events led to big moves in the past and how to understand the story going forward. Going back to 2015, Chipotle was dealing with an E. coli outbreak along with other foodborne illnesses, which led to a huge decline in sales and really damaged the brand's reputation. Chipotle's founder, Steve Ells, did his best to revitalize the stores and introduce new trainings to get rid of the outbreak and brand damage. But it really wasn't until 2018 when the prior CEO, Brian Niccol, joined and made a massive turnaround in Chipotle sales, introducing new loyalty programs, an updated app, and an entirely different menu, which allowed customers to regain trust in the brand. This was an important turning point in Chipotle's story and something that we're going to revisit later in the video, where I believe we're starting to see more similarities. Because of the big investments they made in their online ordering, Chipotle was in a unique position to deal with the lockdown, which allowed their stores to stay open. Margins started to increase gradually, and Wall Street now viewed Chipotle as a tech-enabled, fast casual leader and no longer a well-known burrito chain. They hit a rough patch around 2023, around the same time that inflation was getting out of hand, leading to management having to raise prices, which was seen as a bit controversial. But they were quickly able to return to growth, introducing more menu options, and really emphasized a focus on providing a unique value proposition to customers, a high-quality meal at a very low price compared to other competitors. If we zoom in to the weekly time frame, price is currently consolidating below the 20 moving average and the 200 moving average, which, if we look back to the pandemic crash, is the same indicator where price had bounced off of and had sustained momentum all the way up until today. Another area of support is the July 2021 high and this potential wedge pattern that's forming after this third leg down by the bears. One more indicator to point out at the bottom of the screen is the relative strength index, which is approaching that same pandemic level low. Now that we understand price, let's touch on valuation using the trailing price to earnings ratio, which has also been in a downtrend and is approaching its long-term bottom range of around 30 to 25 times. I say this range is a bottom because if you look back to 2016, around 2013, and 2010, this is around the same area where the PE ratio had bottomed. Comparing that to the S&P 500 by sector, Chipotle falls in the consumer discretionary category that has a PE of around 29 times right now, still above its 5 to 10 year average. So there's still a possibility that the price to earnings ratios for the overall market might go below their long-term averages, which in Chipotle's case means the market might think it should be worth less than 30 times earnings. And speaking of earnings, let's talk a couple of quarters ago when management came out with their full year sales growth, restaurant openings, and full year tax rate guidance. They started the end of 2024 thinking that 2025 would land in the low to mid single digit range. But as Q1 rolled around and Chipotle posted a negative growth rate, they unfortunately did lower their guidance, saying that it will now only be a low single digit, which leads us to last quarter, where they got rid of growth entirely, and now they're just saying we're just going to be flat on the year. So why did they lower their guidance? Over the past 2 quarters, they did actually post negative sales growth, attributed to inflationary pressures, raising costs, and labor. But as you can see all the way to the left, this is the first time in a couple of years where they've even had negative sales growth. And on top of that, the most recent quarter wasn't even as bad as it was all the way back to 2020. If history is any indication, we all know what happened when they were able to return to growth. And sales don't make up the whole story, because we can see that Chipotle is becoming more profitable every year. But the bear argument right now is that sales are going to continue to slow down, and costs will increase if we look at gross margin and net income, which are projected to be down year over year. However, I think we should give Chipotle more credit because looking all the way back to 2023, the margins for next year are still higher, meaning that they've been able to not only scale revenues, but also take out costs from their operating model. And I think there's still reason to believe this will continue. So how do they do it? During each period of Chipotle's growth story, One of their best drivers was introducing new menu items and promotions, which is exactly what's happened recently, with the introduction of honey chicken, one of their best-selling products ever, smoked brisket, carne asada, chicken al pastor, and 2 brand new dips. And if you thought that was enough, let me introduce one of the best inventions since electricity with the Chipotle Build Your Own. It looks absolutely fire, and I think sales are about to take off in a literal way, because they're even trying to test how to deliver this to you by drone. Another big revenue driver is the focus on opening a few hundred stores each year, also announcing expansions into Dubai, Mexico, South Korea, and Singapore, on top of their international strategy of around 60 Canadian stores, 28 in Europe, and 6 in France that they already own today. And this is where I start to get really excited about the growth, because management set a target of reaching 7,000 stores in the United States and Canada alone. If they're able to pull off 300 store openings each year, as they've done successfully in the past, all management has to do is just hit copy and paste for a couple of years, and they'll be at 5,700 by the end of the decade, on their way to eventually reaching their 7,000 target. Because they also want to grow the amount of revenue each store produces up to $4 million a rooftop, compared to only $3 million per store today. This is a massive growth target, and it's really going to depend on if they're able to hold margins in, increase sales, and what their cost of capital is going to be. I've talked about management a couple of times, but who are they? Brian Niccol was the prior CEO on the left-hand side of the screen there, who came from Taco Bell, but he recently left for Starbucks, handing his job over to the new CEO, Scott Boatwright, and new COO, Jason Kidd. It didn't stop there either, because the longtime CFO recently left this year as well, handing the role over to Adam and Jamie. But it's worthwhile mentioning that the 4 new executives for the company have been with Chipotle for quite some time now. There's a lot of really good tailwinds shaping up for Chipotle going into next year, and looking ahead at the next couple of years of estimates on top-line sales and earnings per share. This is exactly what you want to see from a company like Chipotle, where not only are they able to expand their product line, deliver on customer service targets, and increase sales, but they're also doing a really good job of taking out costs and improving their earnings per share. If they're already set to deliver $15 billion in sales by 2027, you could only imagine what that revenue target will look like when they're at 5,700 or even 7,000 locations. Sticking with earnings per share, we can see over time what that next 12-month estimate has looked like for Chipotle. There's a big disconnect between the trend in earnings and the direction of the share price. For context, if we look at the S&P 500 with next 12 months earning per share on the right-hand side and price on the left-hand side, in general, as earnings go up, share prices usually follow. 2022 is a good reference point for what might happen to Chipotle near term, where earnings per share does go down, but as we can clearly see, price will bottom and will obviously lead earnings before they happen. The next 12-month estimate for Chipotle holds constant, price will certainly rebound at some point. And looking back at the earnings beat versus miss history, Chipotle's done a pretty good job of beating estimates over the years. And ever since the pandemic, not only have estimates been raised, but Chipotle has been able to exceed that estimate target on a pretty consistent basis. It's a well-known fact that the restaurant industry is high in competition, with notable competitors being Cava, Wingstop, Shake Shack, and Yum Brands, which is Taco Bell. But as I look at this table, on the very right-hand side, they're definitely outpacing the peer group in terms of the next 3 years of compound growth rate for earnings per share. And on the left-hand side, at a $55 billion market cap, they're trading relatively cheap for how much growth is already priced in. But I think time will tell if the overall industry trends down over time or starts to go below that 5 and 10 year average chart we showed earlier in the video. And I'm not the only one who's paying attention to Chipotle's story right now. Within the last few days alone, 5 different analysts all raised their price target and maintained a buy or outperform rating on the stock, which is exceptionally good news because management also came out and said they increased their share buyback authorization by an additional $500 million, which is great news because not only does Wall Street think the stock is cheap, but Chipotle does as well. So we should expect the shares outstanding to continue to go down over time. I promised everybody price targets at the end of the video. And as you can see, there's no wrong answer. If you choose the lowest, the average, or the highest forecast, there's upside no matter what scenario you believe in. And as we discussed, they continue to raise their price target going into a quarter where they expect sales to be flat. I think Chipotle is set up in 2026 to smash these targets, but that's light work because I'm going to do a follow-up valuation video where I think Chipotle is going to exceed well above that. I'm sticking with that target of $75 a share, and I can't reiterate enough that Chipotle has proven time over time they're able to reinvent themselves and come out well above Wall Street targets. So I'm going to see if next quarter is a turnaround and look out for when price is able to clear the 20 moving average because each time it was able to in the past, the stock ripped to a new all-time high. Let's recap everything we talked about, starting with the bulls. They continue to remind investors why they're best in class, and I think this turnaround will be no exception. They've got amazing brand recognition and are doubling down on their product line, plus reinvesting in their organic growth strategy, investing in bigger and more profitable stores. I see big estimates that analysts continue to raise going into the quarter, and unless I'm missing something catastrophic, I just don't see it in the numbers yet. Plus, you have management buying back shares at a low price to earnings ratio, which is a great use of cash. The bears, on the other hand, are worried about management's lower guidance and the fact that sales were negative 2 quarters in a row, so I think everybody's in a holding pattern to see what the next quarter brings. Plus, it doesn't help that management has cited costs are going up, including the price of labor, but they can't be the only ones in the industry feeling this pain, so I think the stock is just a little beat up for that. Another concern is all the management turnover, but I went back and checked, and these guys have been with the company for a couple of decades now, and before that, they were already working in the food industry. So the last thing to keep an eye on is if they're going to raise prices or not, because all these different products are coming out. So I might just have to go into the restaurant near me and try these things out for myself. I'm going to give Chipotle, your order is almost ready out of 10. And if they're able to clear these technical factors and return to sales growth, I think this stock is going to do great in 2026. And if you feel the same way, let me know in the comments below. I absolutely love making these videos, and you can find links to more of them on the screen now. Thanks for watching, and I'll catch you in the next one.